If you want to make money and increase your chances of being successful as a trader or in the markets in general, you should definitely look into the underlying mechanisms that create the market structure as we know it. Now, the market does work a certain way. Now, there is crime in the market, but that does not mean that everything is crime. So it's always good to learn. And you will not learn on social media, because social media is not a good place to learn. Now, we have a filing out of the Cboe BYX exchange, and this is probably going to be in several other exchanges as well. This is a self-regulatory organization, Cboe BYX exchange, one of the 18 exchanges that get order flow. This is a notice of filing and immediate effectiveness of a proposed rule change to amend BYX Rule 11.17, which I've been over this before, clearly erroneous executions. Basically what this does, the purpose of this is to amend the rule just mentioned, and specifically the exchange proposes to make the current clearly erroneous pilot program permanent. And number 2, limit the circumstances where clearly erroneous review would continue to be available during regular trading hours. So, not only are they going to make the clearly erroneous pilot program permanent, but they're also going to limit the circumstances where clearly erroneous review would continue to be available during regular trading hours. Now, when the LULD plan to address extraordinary market volatility already provides similar protections for trades occurring at prices that may be deemed erroneous, since the LULD plan is in place, that they are saying should take over the circumstances that clearly erroneous review would no longer be available. Now, the exchange believes that these changes are appropriate because, again, the LULD plan takes care of those aspects of this, and in light of amendments to the LULD plan, including changes to the applicable price bands around the open and close of trading. Moreover, the proposal is substantially identical to Cboe BZX exchange because, like I said at the beginning, there's likely going to be more of these out of several exchanges. And this erroneous pilot has been around since September 2010, and basically what it is, an erroneous transaction means basically an error transaction. You've probably seen it before. Right off the open, your calls or puts will be up like thousands of percents, and then they will go back down to normal. That's an erroneous transaction. And they've been extending this and extending this and extending this until today. We just saw the filing. It's going to be permanent. It says here, in the 12 years since the time this was drafted, the exchange and other national securities exchanges have gained considerable experience in the operation of the rule, as amended on a pilot basis. Based on that experience, the exchange believes that the program should be allowed to continue on a permanent basis so that equities market participants and investors can benefit from the increased certainty provided by the amended rule. The clearly erroneous pilot was implemented following a severe disruption in the U.S. equities markets on May 6, 2010, also known as the flash crash of 2010. So again, this is flash crash related. We're sitting here in the current market state where I think we're going to crash up. And yeah, this is what the difference is. You must learn how the market works. Believing things is great, but if you're believing nonsense, at the end of the day, you're just believing nonsense. So keep that in mind.